Investors around the world are worried about the possibility of a recession, and one stock that could be resistant to all of that could be Netflix. That is because consumers will likely cut out all types of spending, but the value proposition that Netflix brings will likely not make its way out of the spending of the average consumer. And we are seeing the impact of that in Netflix shares as year to date, while the broader markets and most stocks are off many percentage points, Netflix is actually higher by about 8%. We'll discuss this one technically as well. It's tend to lead the technology sector and other Mag 7 stocks. It led it on the way down in 2022, but it was actually one of the first stocks to recover and start a monster upswing on this one. We'll look at this one technically. If you get a close above $1,000 on Netflix, I think that could be starting a major trend that not only applies to Netflix, but we're looking across other technology stocks as we move into earnings season. We had those Q numbers come out after the bell. We'll compare them to what the expectations were on Wall Street. We also got guidance for the upcoming quarter as well. We'll compare that to what the expectations were. The company is no longer giving subscriber figures and other metrics that they used to give, including average revenue per users across the different regions. The company is saying that now it operates with over 2/3 of its users being outside of the United States. So this is truly a global media company. We'll look at the financials as well. This company is just absolutely head and shoulders above the rest of the entertainment business, certainly the rest of the streaming business, and then technically as well, looking like we're heading towards potentially a new higher high, the uptrend that has been intact for nearly 3 years. Absolutely intact. What is going on, investors? Hopefully you guys are doing well out there. It is the start of earnings season. We've got Netflix. We've also got Equity Empire. If you like these earnings videos, I've posted many over here, including Wells Fargo, JP Morgan, Goldman Sachs, ASML, Johnson & Johnson. We'll be doing TSM and United Health. If you like the earnings videos that I post, Equity Empire is the place where they're all going to be. We're going to continue to post mega cap tech over here on the YouTube side for free. Market cap over at Netflix, $400 billion. I tell you what, this company can continue its trend. You're probably working at $1 trillion valuation probably over the next couple of years. I've more recently added my position to Netflix, and I'm sitting pretty right now. We'll see as we go through this video if there's indications that that will continue. Revenue coming in at about $10.5 billion. That was 12.5% growth year over year. Beat expectations. In terms of the outlook, we no longer get subscriber numbers. That used to be in this table that they shared with investors. Revenue in the upcoming quarter, which was represented by the Q2, a shade over $11 billion. Wall Street was expecting a number close to right about $10.9 billion. The high end was for $11.4 billion. So they're hitting the mark as it relates to revenue. On the earnings side, projecting over $3 billion worth of net income. That would exceed the fantastic net income that they just put up of about $2.9 billion, and it far exceeds what they've done over the past several quarters. My guess is the $3 billion of net income would be a record for Netflix. We'll talk about what they are doing with their strong cash position in a moment, including buying back the stock. They do have competition, but what is a tailwind for this company probably over the next 25 or 30 years is you have a complete generation that is growing up, particularly here in the United States, but I'm assuming this is probably true across the world or globally. It's probably more or less a trend is people are continuing to move away from what is referred to here in the United States, at least, as linear or cable television. This is something that my parents still have. My in-laws and all the older people in my life still have some kind of linear cable TV subscription. Anybody my age or younger doesn't know what cable is. It's like having a landline. So the growth opportunity for Netflix, YouTube, certainly Disney Plus, Prime Video, Apple TV, and other video streaming, obviously this pie, which they really only operate just a small sliver of, is likely to get bigger and bigger. And we've obviously seen the move into live television, live sports, live events, Netflix just getting into that. It's probably it will be a huge growth driver for the company going forward. Now, monetization, we're going to dive a little bit deep into the weeds as it relates to buying ads. So if you are an advertising buyer, you're trying to advertise on Google, on Meta, or on a site like Netflix now, which was just more recently allowed advertisers to advertise against its streaming program for a lower tier price for the end consumer. Netflix just a couple of weeks ago, rolled out its own first in-house ad tech platform, basically what they call the Netflix Ad Suite. This is going to allow advertisers to have their own dashboard, create their own creatives, launch their own ads, measure the effectiveness of those ads. This is what launched Meta or Facebook or Instagram into the stratosphere. This originally is what launched Google into the stratosphere. When you see a company focused on earning money through ad dollars, you have to have your own ad suite. You have to allow the advertisers to come in there and log in and create their own ads. This is going to expand the number of advertisers on Netflix by a huge amount. Sure, the Pepsis and the Coca-Colas and the large brands, the Fords, the GMs that spend a ton of money on advertising, they have ad agencies that do a lot of this stuff for them. But this is going to allow ad agencies to work a little more efficiently. It's also going to open up to other brands and other advertisers, and this is a huge deal. Now, most shareholders won't pay attention to this. They won't understand what the big deal of this is, but the fact that this rolled out in the United States April 1st, so this is not included in the most recent quarterly financials. It probably is baked into a little bit of their guidance, but this shows me that not only Netflix is serious about this ad tier, but you're probably going to see serious growth when it comes to advertising very soon. And I hope at some point with Netflix, they actually break out what percentage of this revenue actually comes from advertising, because I would assume as we sit here several years from now that actually the bulk of this company's revenue comes from advertising rather than subscriptions. Just like Netflix made the pivot from selling or giving you those DVDs in the mail and then they switched to the streaming model, my guess is they're always going to collect some fees and some revenue from consumers that don't want to sit through ads. They're going to generate tons and tons of money from advertisers. Now, when you look across the regions, unfortunately, they stripped out probably the most interesting metrics on this, is that relates to the average price per unit in the different regions. You do get a year-over-year growth rate, and really across the board, whether it's in the United States, Europe, Latin America, or Asia Pacific, you are seeing strong growth here. And the company noted that 2/3 of its user base is actually outside of the United States. That's obviously relatively impressive. Now, from a revenue standpoint, $10.5 billion. Sales and marketing year over year, just up fractionally when you went from 9.4 up to 10.5. You added $1 billion to the revenue side over at Netflix, and your sales and marketing barely budged. That's fantastic. Technology and development continue to be a strong reinvestment area for the company. Finally, general and administrative basically staying flat year over year. So your operating income is going to skyrocket year over year from $2.6 billion up to nearly $3.4 billion over at Netflix. This business is scaling absolutely phenomenally. Net income, $2.9 billion last quarter. It was $1.9 billion a year ago. It was about $2.3 billion. Company has plenty of cash on its balance sheet. What are you investing in? Is these content assets. They get about $32 billion of what they say is content assets. You got a little bit of both short-term and long-term debt over at this company, but it is completely manageable, totaling out about $15 billion. Again, that long-term debt tends to probably fund some of the content assets. So you borrow some money up front, get access to shows or produce the shows or however that works for them. And then you monetize that obviously over a longer period of time through subscription fees, and now probably primarily through advertising as we move forward. Now, as it relates to cash flow, it is, about what you'd expect. $2.9 billion of net income, $2.8 billion of operating cash flow. They don't have, they're not investing the money a lot here, $128 million. So at scale, and as this thing just continues to scale up, this is the financials of Netflix are going to look even more and more like a tech company, because they don't, it's really like a piece of software. They obviously have to spend on content. They obviously have to reinvest in content. And there's royalties and all those types of things. But I mean, just incredible. $128 million. That's all you had to spend on property, plant, and equipment. You do have some investments of about $150 million. That's less than $300 million. So you had $2.8 billion of operating cash flow. Didn't have to really invest a whole lot in other different types of investing activities. So what do? Well, you buy back the stock. My goodness, $3.5 billion buyback. They did pay down some debt in the most recent quarter, offset by a little bit of issuance there. I tell you what, these are, if you can just keep doing this with Netflix, there's no reasons why these shares at least can hold these levels, if not continue to push higher. I am seeing in the after hours shares of Netflix up by about 4%. That follows a 1% move during the regular trade. I put up a fake green candle here because you have a series of highs that were made back. It looks like in March here, we'll call it right at the $1,000 level. You would like to close above that level tomorrow. So anything, a close of Netflix above 1,000 tomorrow, that's a very, very good sign. That means absolutely this uptrend is likely still very much intact, and it puts you on a path to the all-time highs back up here at about 1065. And with a lot of the financial media sites, the CNBCs, the Bloombergs, really starting to basically advertise Netflix as this recession, like resistant type stock or immune to that type of pressures, well, then investors are probably going to continue to funnel into this stock. And that's what appears to be the case in the after hours. Folks, that was Netflix Q1. Be sure to check out Equity Empire. We've got dozens and dozens of earnings videos that will be posted over the next couple of weeks that you won't see anywhere else, including other research as well. Thank you for all of you that have signed up already. The response has been overwhelming, and I really appreciate all of your support. Be sure to join us tomorrow on Friday for the Fang Stock Recap Show. We'll discuss Netflix and the rest of big cap tech as they move into earnings season very soon. Thanks for tuning in. Good luck with your investments.